Yields have been rising in the past couple of weeks in the market as offshore interest has waned. Well, joining me to discuss the recent volatility in Nigeria's currency and fixed income market is Nwabueze Okonne. He's a currency trader at United Bank for Africa. Thank you so much for joining us, Nwabueze. The NAIRA has come under a lot of pressure lately. The interbank FX markets, the NAIRA weakened against the dollar yesterday, after yesterday's seeming respite, losing about 60 kobo to close the day at 159 NAIRA 40 kobo to the US dollar. That brings it to a low of about 159 levels. Now, for the second time in the past week, this is happening. How is it faring today?
Hi, thank you for having me. I think we saw NAIRA hit above 160.45, the highest this year, the highest in about almost a year. The last time we saw those levels at 160.45 was sometime in August last year, and we saw it hit again on Monday at 160.45. It actually did ease back to below 159, but today we're seeing it trading at close to at 160 even. Like you said, demand in the interbank market has been somewhat enormous. I would say that the typical match of supply versus demand that we've seen the period of time, albeit from the start of the year, even up to like a few weeks ago, that typical match of demand and supply has actually faded. So we're seeing more of demand, less of supply, and that has been filtering into the price. I mean, right now we're filtering on the CBN upper band of plus 3%, and we're watching to see how far they will go above the band. Like I said, demand has been there, filtering on the high side. Supply has not been so much as anticipated, or so much as that has always been. And also, I mean, I think it's a general thing, even across the emerging markets, you see weakness across the currency front. So I don't think Nigeria is suffering for anything outside of the ordinary.
All right, but let's take a look at the T-bills market. Now, it remained bearish with yields going up an average of 40 basis points and as much as 70 basis points, with the highest losses recorded on the short tenor bills. Well, talk us through what's happening in that space.
It's on the rising trend. Albeit today we see it a bit slow down on that, but overall it's still on the bearish trend. People are getting off securities across those tenors, from the short end taking the greatest hit, even onto the longer term. But you're seeing those steep losses coming in. It's not really going to be any different from what the overall sentiment is being. General sentiment, not like I said, not only locally, even offshore, is more like a gradual easing out of the emerging markets and the frontier markets back into the developed economies. That has been a trend that has continued. Most players would not, most offshore players right now would not see so much value coming into the local side. But I think on a personal basis, it presents good opportunities for the local players. Yields at these levels, I think it actually augurs well for them. But we'll test to see how far these years will go before bargain hunters begin to come into the market again.
While yields in the bond market remains under pressure, in particular the 7-year 16% FGN September 2019, closing at 14.71%, up 100 basis points from yesterday. Will you attribute this to panic selling?
It's been a panic selling all through. I mean, I think what has happened is the market, the bull run on the market has continued for over a year now, and every now and then the sentiment has been when is the correction going to happen, when is the overbought positions going to be unwound. Looking at it on the technical picture, you're seeing that given this type of our market and the speed of liquidity that we have in the market, that happens when this kind of run comes in, it actually does aggravate the mood. That's what we're seeing now. More of an unwind of the overextended condition that we're seeing in terms of yield, and that has also been pushed a little bit in terms of liquidity. But if you look at the bond market and across the curve now, you're seeing a bond staying at the 14 and a half, 14 and a quarter levels. That has been the picture so far, and I would want to see that really it's come to a place where you could say a plateau that would have happened on those yields. I don't think that in the near future you would begin to see bargain hunters coming into the market. That's my take, and that's what the general sentiment I think will be shifting towards.
All right, well, let's talk about the 85 billion naira bond auction, where supply has been reduced by the DMO for the first time this year. Now, did traders build positions at these levels, or would you consider the yields to be attractive?
I think for the traders, the attraction will be, even though the supply from CBN might have eased a bit, from the DMO, sorry, might have eased a bit, I think the attraction will also be to go into the auction, given that overall sentiment is that the auction actually pay you a better yield than actually picking it from the secondary market. So you see some people actually eating up on the secondary market to go play in the auction and pick it up at the gold yields. My sentiment still remains that the yields look good for the country. The yields, the MPC assessment of the economy still looks good, and I don't think for the local guys it's worth so much of a panic selling to happen into the market.